what I do personally is I manage the bank's interest rate risk. So effectively, I work with a team that looks at all sorts of different exposures that the bank and its customers have, and essentially hedge that out or take on the risk based upon our own view so that they have what they essentially want. Do they want to be receiving a fixed rate, floating rate, all sorts of things? That's what we do. Do they want rand exposure, dollar exposure, euro exposure? And we essentially manage that risk for ourselves and for our customers. That is sort of, in a very simple form, what we actually do. In terms of sort of turnover, which I think is often quite impressive when you actually look at it, in notional value, we probably execute between 3 and 6 billion rands worth of transactions a day on our desk alone, in term products. So anywhere from 1 week to 30-year products, so hedging people's risks all the way out to that period there. There's two elements of sort of interest rate trading. There's essentially the derivative side, which I kind of gave a brief overview of, and then that's essentially hedging corporate and the bank's risk. Then there is our cash business, which is our government debt business. So we are primary dealers at Standard Bank. So every week we buy 15% of what the National Treasury auctions as government debt. So you're looking at about 300 million rands worth of debt we buy onto our own balance sheet and then distribute out to our customers. This is a function which we've done for quite some time, along with a lot of the other banks in South Africa, and this is something which over the last obviously sort of 6 months has been quite topical in press. You've probably heard about the WGBI flows, the World Global Bond Index, which is estimating between sort of $4 to $9 billion of money coming in primarily from Asia. So this is obviously something which has been very supportive of the bond market, very supportive of National Treasury's funding program. There's also been a large shift in global investor sentiment, which perhaps my colleague spoke a little bit about. However, though, because yields in the developed world are so low, investors are on a constant hunt for yield. In South Africa, with its incredibly steep yield curve, has attracted a lot of money over the last 2 years, and this is something sort of which will likely persist for some time. However, though, one always needs to be careful about getting into a position where you see bubbles forming. So this is something which we manage and we monitor, and sort of we run risk ourselves. So in a kind of relatively large nutshell, that's what we sort of do here.